Welcome back. This week, markets have their eyes glued on U.S. President Trump's reciprocal tariff announcement, as well as worldwide economic data prints. Joshua Mahony, Chief Market Analyst at Scope Markets, joins us for a preview of the global week ahead. Thank you so much for your time, Joshua. Of course, everybody has their eyeballs on the 2nd of April, D-Day for Trump tariffs, and that is, of course, on Wednesday. Are the markets getting increasingly nervous?
Exactly. I mean, we saw a slump on Friday, the continuation of that on Monday. Certainly overnight, we saw a nod to just how bad it could be, with the Nikkei 225 falling 4%. Europe not following suit in terms of the size, but certainly in terms of the direction. And ultimately, the question mark here has always been just how bad will it be for those countries that have been in their firing line, the so-called reciprocal tariffs. Now apparently could be widespread. There's been talk on the weekend from Donald Trump saying that whoever said it was going to be 10 or 15 countries, it could be global tariffs. And that's why we're seeing, particularly at the moment, some significant jitters within the markets. Maybe he's setting us up to actually relieve us with what seems like friendly reciprocal tariffs, but who knows with him.
It's quite interesting because I think just a week ago he had said that he will be more flexible, and then a week later it comes out that he said that they should be more aggressive on those tariffs. So it's going to be quite interesting to see what actually comes out on the 2nd of April. Quite a number of stock markets, as you've mentioned, are in correction territory, particularly in Asia. So really a lot of jitters there in the markets. But there was a call yesterday between the British Prime Minister and the President of the United States. Even though the rest of Europe is on tenterhooks because of Trump's tariffs, it seems that is not the case with the UK. Is the UK maybe a lot calmer?
Yeah, I mean, it's a catch-22, right? You know, it seems great that we have the possibility of perhaps a less strict stance from Donald Trump, but the only reason for it is, frankly, we don't necessarily have as an impressive manufacturing sector as the likes of Germany, for instance. So the fact that the UK doesn't have a trade surplus with the US means that it's not necessarily in the firing line to the same extent. And whilst we're talking about this blanket tariff move from Donald Trump, I think that by and large that just means that he's going to be able to strike friendly deals with the likes of, let's say, the UK and countries like that first and foremost. And essentially they'll just be deals where you can say that, you know, we'll work together, we'll try and increase business, things like that. You know, I don't necessarily think it'll be too hard line for the UK, but certainly mainland Europe has a big and increasing trade surplus with the US, and therefore it's certainly seeing more significant jitters at the moment. We've tried to work out exactly how bad it's going to be.
All right. And I mean, this is also quite important for the UK that just had its spring statement delivered by the finance minister last week. And really, with the UK trying to really get its economy going, tariffs would not be a good thing. So it's quite interesting to see that tariffs aren't really seen to be much of a hurdle for the region. Let's go back to the US and talk about the labor market, because I mean, we are living in a period where people are worried about the US's economy and its ability to grow amid these tariffs, but also having a lot of international companies saying that they want to invest in the US and build plants there and create jobs. So we have a lot of U.S. economic labor data coming out this week, coming out from ADP. We also have the March non-farm payrolls that are coming out on Friday. Looking at the fact that that will be for March and that the tariffs have not kicked in yet, can we expect strong numbers from the labor market this week?
Well, you know, it's going to be absolutely critical, quite frankly, because everyone's trying to gauge exactly whether this stagflation is going to hit the US economy. The stagnant part is about the direction of travel for economic output. Deflation, of course, is, are we going to see high inflation? Well, this is going to give us a little bit of both. Are we going to see rising wages that would potentially spur inflation? Probably not. Are we going to see significant weakness in terms of the economic outlook? Well, we are expecting to see a weaker jobs report in terms of the non-farm payrolls this time around, coming around the 130K mark. But we also have a whole raft of data coming over the course of the week. And certainly for traders out there, there, it's worthwhile keeping a close eye on the ISM manufacturing PMI. Notably, this ISM version, this private version, also gives you very clear breakdowns in terms of the direction of travel for prices and employment and things like that. So manufacturing right now really in the firing line, because for all of the prospects of people bringing business back to the US, there's also the high prospect of people stopping business. They don't necessarily know exactly what the lay of the land is in terms of tariffs. And therefore, I think businesses are likely to be holding off for the time being, whether it's investing in people or investing in the plants themselves.
Well, talking about PMI, we did have China's PMI figures out for March, signaling an expansion in both the manufacturing and services sector. Are we seeing some green shoots in that economy? Is there something to write home about at this point or not?
I think so. I mean, I wouldn't necessarily write home about it, but you know, it is the best manufacturing print for roughly a year. This comes off the back of course, these stimulus measures that they're trying to push into the economy. I think there's a feeling that the Trump sort of tenure is probably not going to be perfect for China.
Yeah.
So they have to reallocate towards domestic consumption. And certainly that's probably going to be something that many countries around the world, they've grown so accustomed to US consumers sort of bailing them out to an extent. And with the US trying to bring that business back home, then they have to find new consumers. And for China, I wouldn't say it's easy, but at least they have the consumers there and they need to grow that. So, you know, the fact that we're seeing a beat in terms of manufacturing, strength in terms of services, it at least means that they're pointing in the right direction. And equity markets have been showing that a confidence that China is at least heading in that right direction, with the Hang Seng really outperforming over the course of the past month.
Well, Joshua, let's go back to Europe, and someone that's not heading in the right direction is Marine Le Pen. Of course, a scandal has hit France's far-right party, the National Assembly, and this is as its leader, Marine Le Pen, has been found guilty of embezzling European Parliament funds. Just talk to me about this moment and what shifts it brings about within France's political landscape that's been quite shaky lately.
Exactly. I mean, look, we've grown quite accustomed to the far right suddenly making inroads across, well, the US, but also Europe. And certainly Le Pen were kind of at the front of that, really. And so Marine Le Pen arguably is the most popular politician in the country. The idea that they're essentially banning her for 5 years and it means that she won't be able to run, to some people it makes a mockery of democracy and really questions the motives of the court passing this judgment. It stops people from being able to vote in the person they want to lead the country. You don't necessarily know that she was going to win, but certainly she was looking like a very strong candidate given what's happening around the world right now. They have got a plan B, and that comes in the form of Jordan Bardella. He's 29-year-old. He's certainly been making significant inroads recently, and he has a strong support amongst the sort of younger group. And arguably, you might say that certainly if this was Donald Trump, he'd be touting this as the establishment wanting to get me off the ticket because they know that I'm going to win, and you know they don't want the real people to get what they want. Well, arguably, this could strengthen the hand of the party, and as long as they do have a strong person to step in her shoes for this election, it doesn't necessarily mean they're out of the running in, I think it's 2027.
Yeah. There's definitely no shortage of drama in the political landscape in Europe. But thank you so much for your time and for your insights there and what is coming up ahead this week. Joshua, that was Joshua Mahony, Chief Market Analyst at Scope Markets, with the Global Economic Week ahead.